Hello everybody, thanks for tuning back into Crypto Mainly. My name's Lee. Let's just jump straight into the content today, guys. Wow, FOMC meeting created a rather nice pump. Just very timely as well. Obviously, what with us resting on the 200 simple moving average on a 4-hour time frame, that was obviously significant. And obviously, the FOMC meeting did give us this pump. When I did the video yesterday, what we were looking for was for us to come back up and come back down and sort of retest this breakout area and then get the the continuation. But sorry, the magnet was on then. So yeah, we were looking for something like this. So said that if we come back up and get a retest there, that would look very promising for continuation higher. But obviously the FOMC meeting created quite a significant move there. I think the move was let's just have a quick look to see what we're looking at. So yeah, around about a 13% move, which was great, very nice. It was a nice altcoin action as well. The only thing is with that, obviously, when you get a sudden move like that, it's eaten through any kind of resistance on the way up, and therefore on the way back down, there's going to be sort of less support. So we could get this actually, come back, gradually creep its way back down. So is the pump going to last? Time will tell. What I expect to happen, actually, guys, is is something like this. If we put the fib on there from the low to the high, I actually think that we'll come back down to the to this neckline here. So you see the neckline of the W, this sort of W sensation here, the neckline there. It would make sense that the price comes down. It's around about the 22,000 to 22,200 area, which is the 0.5 Fibonacci retracement from the pump as well. So that would make sense to me, guys, to see that happen. So I'm looking for something like this, where we'll probably get another another stab up into the resistance there, come back down, maybe bounce along that daily for a little while, then come back down, and then get something like this, where that would look really nice if we can break above particularly this upper support line. But as you can see, what it will create is another nice bottoming pattern here, so another double bottom. So you've got the you've got lows, and you'll have higher lows then, and obviously if we can get back up and break the neckline, then the measured move of that would take us from the base there to the wick high there. The measured move of that would actually take us back up and heading on for those higher targets that we've been speaking about now, around about the 26,500 mark. So I think 26,500 is on the cards, and once we get sort of marching up that way, we are getting close to the CME gap at that point as well. So let's just have a quick look. So the CME gap it starts at sort of 27.5. So the sort of, if we do get that accelerated move, start getting some confidence back in the market, as prices do break out and go higher, there is every chance that the market sort of surprises everybody and does take out that CME gap, which would be rather nice. So a couple of other things to look at with in regards to Bitcoin. As I say, on here you can see that actually yesterday did close above the 200 weekly SMA, which was really nice. You can also see on there that we are we're coming up against the 55 again. So this is the 55 SMA on there, which as you can see, so the 55, that's actually the EMA, but if you change it to the SMA, it's actually SMA wise, look, we're actually just above the 55 as well. So I think what we'll do is I'll actually monitor that as in the SMA rather than EMA, particularly because as you can see, we sort of ground up against it, and when you change it to the SMA, it's actually it's much more of a clear area. It's actually much clearer what's happened here. It looks as though we may have we've certainly broken above the 55 EMA. SMA wise, obviously not so. So if we change back to the EMA, you can see that we're actually, we came up against the EMA and got rejections from there. So whichever way you look at it, guys, the SMA 55 SMA we've broken above now. EMA we've actually rejected from it. So there's a little bit of a we're obviously in an area between the 55 EMA and SMA now, which is we're bouncing along in between basically. But positive signs nonetheless. The important part to take away from this is, as you can see from this chart here, is this range high here. We've broken above that, and now we're going to likely come down and retest that breakout area, and then obviously at around about the sort of 22,000 mark, as I said here. So come back down to 22,000. That'll look very positive. If we do that, we'll come back down, and so we're basically retesting the lows of the range here at 22,000, and then and then continuation to the upside is likely. Coupled with the fact that we were on the 200 SMA on the 4-hour, we did get a nice bounce from RSI as well on the daily, as you can see. But most of this move has been fueled, obviously, by the the FOMC news there. So this was the chart that we were looking at on sort of a smaller time frame, as it were, on the 4-hourly. We've got the bounce. We've come above this ledge of support here, of resistance here rather. So we are likely to come back down. As you can see, this ledge of support here is, as I've said on the other charts, is sort of around about the 22,000. And of course, it's the same chart. We're just looking at it from a slightly different perspective, but on a smaller time frame like this, on the 4-hour, it's very clear to see the 200 SMA acting as support, and we've broken back above. You can also see on the smaller time frame that if we if we draw the range highs from here, you can see that we very clearly have broken out from that as well. Okay, so again, you can see when you look at the 4-hourly here that that it's possible that we come back down, and get the bounce from the from that level there. So that ledge of support is, as I said, around about the 22,000 mark. So there's some signs of confluence there. So it would suggest that we are, some of the indicators, so stochastic RSI and some of the momentum indicators are actually looking like they're getting into the, stochastic RSI is just starting to tip down, and the some of the momentum indicators are sort of getting a little bit overheated. So it is time to cool off a little bit. So that would make sense. Coupled with that, if we have a look at the Ethereum chart here, guys, we were looking at the at this chart, at this AB equals CD correction, which obviously clearly that didn't play out. The FOMC meeting gave us that pump, and we actually broke back through that resistance. I did say that it's possible that might happen, and sure enough, it did. And the same again with this, guys. Some of the indicators are suggesting that we are going to get a little bit of a cooling off now. And once again, if we do actually draw, if we draw a fib on here from the range low here to the high, you can see that the 0.5 is actually at the sort of 1500 mark. So again, this would a retracement to the 0.5 would coincide with what could happen with Bitcoin if Bitcoin comes back down to 22,000. So if we draw a fib on this one, for example, from the sort of low to the high there, you'll see that the 0.5 is at around about the 22,000 mark. So again, confluence there with a 0.5 retracement from this. What we don't want to see is us breaking back down below this support line, guys. If we do see that and prices come back down to this area here, so if we come back down and we reach this area, so price action comes down and comes back down to this area, then that will look pretty horrible, because you can see then that you'll have a series of highs and then lower highs here. So this would then look like a topping pattern with a measured move, somewhere down around about the sort of back down to the 11, around about the sort of 1,000 mark. So we don't want to see that happen. Doesn't look like it is going to happen, to be fair. I think we'll come down to the bottom of the support again, and then we'll get some continuation higher from there. But do watch for that, guys. It is a possibility. We need to make sure that we break up above there, and we don't create a series of lower highs here. This high actually, incidentally, is slightly higher than this one. So it is looking at, it's looking okay at the moment, and it would be quite healthy to see us come back down to support and then get that bounce from there. So nothing disastrous, just something to keep an eye on there, really, guys. And just so we've spoken about these charts. Just in terms of the dollar, this is the tether dominance. As you can see, I've suggested this many times on the videos before, that when we came up against this resistance, we would reject, and we have, sure enough, and that's what's created the majority, of the nice moves that we've had recently. You can see here from this, it's not actually, just make it a little bit clearer. I'm sure that most of you can see, but there is the descending triangle that we were talking about here. Okay, and as you can see, so the measured move is the back, so the purple arrow there. So as you can see, once we've come down, we've actually found support again at a long-standing previous support, but we've come back up and we've retested the breakdown from that triangle. So this is looking really nice. We are finding a little bit of support here, but I think this support will break and we're going to get continuation to the downside here. So whilst this bounces around here, it would make sense that's when when Bitcoin is bouncing around in this area for a little while. But once we get the breakdown from this support area here, once we get that breakdown, the measured move it is all the way down here at around about the sort of 5.3%. Yeah, so around about the 5.3%. So we're going to get a little bit of bouncy action here, because obviously this is a long-standing support. And then obviously I think we're going to roll over. And this move here will translate to this move where we go up to 26,500. That makes sense in terms of the size of the move. If we measure from the top to bottom, that was about a 12-13% move from here to here, which is the same from here to here is about a 12-13% move. The move from where we are now down to the bottom is about a 17% move, and if we add a 17% move from where we are now, that does take us back up into the 26,500 range. So that's great. I think that's what we're going to be seeing, guys. Obviously, what we don't want to see is this all being undone and us coming back down below 22,000. If we do start to come back down below 22,000, then we are very likely coming back down to the 20,000 area. And if that does happen, there's every chance that this support might break on this last retest, and for this bear flag to play out. And that's obviously not what we want to see, but it is a possibility, guys. It is something to think about. So this is a bear flag. If we don't break out soon, then we'll get the if we do start to see price break below this 22,000 mark and come back down to these lows again to 20,000, there's every chance that might break, and we might see this continuation lower that we've been talking about as a possibility for a while. But to sum up, guys, I think that the possibility is down to 22, up to 26.5. Ethereum down to 1530, and then continuation higher. Yeah, and if we get that breakout, it looks like we may see the $2,000 price tag again for Ethereum, so that would be rather lovely. So I'm going to leave it there, guys. Lots to happen, lots to think about. Thanks very much for liking, subscribing, and following me. Really appreciate it. Do join the public Telegram group. It is free, guys, so do come along and join in, and I look forward to seeing you there. Take care now.